What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we have SPY, the Qs, and IWM, which make up the broad market. Then we look at some companies: Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Real quick, we know it's still quarantine time for most of the world out there, so if you're interested in picking up a valuable skill such as learning how to read technical charts and trading, then go ahead and enter our free one-on-one call contest. We're giving away a free call. It'll last an hour long. We can go over anything you'd like in regard to charting, trading, and strategy development. So if you're interested, enter on Instagram by following us, liking any of these three posts, leaving a comment down below tagging someone, and that will automatically get you entered. You can also like this video, leave a comment down below here, and subscribe. Same thing. You will be entered into the contest. Our members of our free newsletter that goes out on Sunday afternoons got the heads up on this first. So if you're interested in joining that newsletter, it comes with 5 to 10 swing trade ideas. It's completely free. First link in the description. We're also, like we said, on Instagram and do have a Discord server if you want to chat with myself and other traders in real time. All that stuff's linked down below. Alrighty, starting off on our SPY weekly chart, as always, a few key things have developed. Most of them are easy to look at on the daily chart here, but on the weekly, I do want to point out we were looking for a week of sideways consolidation, and that's essentially what we got here. You can see that the range of this week's price action is entirely inside of the range of last week's price action. We sort of formed this dragonfly doji here. We did break down below our support trend line, but we are holding up in some sideways consolidation. So I think what we're forming here is a bit of a bull flag. Again, it becomes a little bit more clear on the daily chart, but I do want to point out one more time our Fibonacci's. You can see if we draw them back out on our chart, you can see the 50%. We did breach that level and go back to the downside this week, but buyers really stepped up and pushed prices higher. Or you could look at it in the opposite sense of things, where sellers really couldn't get any strength below that 50%, and buyers were easily able to recover it back above. So I still think that the move here, and again, this will become a little more clear on the daily, is back to the 288 resistance. With FANG earnings coming up this week, I think it could easily be a catalyst to push things higher in the market, where we could target our 61.8. And again, once things kind of get here, it's not a guarantee, but usually that means that this low has since been secured. It's very unlikely that price will go all the way back down there. Again, anything can kind of happen, but probabilities say once we kind of get above that, that is not the case. So coming into our SPY daily chart, again, you can see we did break down below that support trend line, which is okay. It's not the end of the world here, because buyers were able to, essentially fill the gap back to the upside once we gap down below it, and push prices back higher. Our 275.17 support level, which is really the key level in my opinion here. With all these touches, we are trading back above it. Another key development: we are trading back above our 50 SMA on the daily chart here. You can see this hammer bounced off of it, opened at it, and closed slightly higher. So that's a bullish thing to note. We do have support to the downside developing here as well at 271.50, just about, based on the low of this hammer and the low of the day when we gap down here on Tuesday. So that's an important level to note to the downside. But again, I still think with this consolidation here, we're getting a bit of a bull flag forming. Next resistance should be 288. Anything higher than that, and again, with a breakout in FANG earnings, potentially, it could put us up here at $300 and our 200 SMA on the daily chart. So that's kind of our upside target right now. If things do fall apart and go to the downside, we are still covered. Again, 275.17, 271.50, just about the low of these two areas in here. If that does break, we're looking for a move back down to 263.02 and 256, just about, based on our level here. So keep all these areas in mind. Again, we are sort of favoring the bulls still here. After this nice week of consolidation, I think the move is up. Alrighty, so moving into the Qs, you can see we have a very similar pattern where essentially we had a gap down, found support right at that 50 SMA, so key level there. We did bounce off of it, and we're moving in the upwards direction now. It looks like we have resistance coming into play here just about. You can see all these touches, just splitting the difference here between the highs at 214.50. So look for that to be a breakout point come early next week. If we do the Fibonacci's on the Qs, again, it'll just show you how much stronger the Qs are than SPY, for example, on the S&P. We've already traded well above our 61.8 level here. We gapped down below it. Again, remember, buyers really bought things back up and pushed it back above, and we've traded multiple days above that 61.8 again. So to me, that's a sign of extreme relative strength here in the Qs with FANG earnings. Again, I think the target should be to the upside. So next up for resistance, we have 219.50, just about. You can see got rejected in here, so look for that to act as a resistance. Higher than that, 223.83, and then we have a massive gap to be filled above that at 229.28, so keep your eye on that should things really start to get explosive to the upside here. Again, we are respecting our support trend line here, so another feather in the hat, if you will, for the bulls, and buyers really keeping things upright. If we do start to break down, though, we have support coming in at 206.35. Anything lower than that, again, you can see this gap was filled. We then filled this gap here, so this is very structurally sound below us here, but support below at 203, and then 198.30. Lower than that, we should be going to 192.61. But again, just like SPY, I think the bias should be up here. And lastly, IWM really showing us the most sideways consolidation as in terms of, respecting that pattern the most. Our gap down wasn't as severe as some of the other indexes that we just covered, and you can see that we recovered quite nicely back up to our sort of resistance point up here. Again, we're looking for the breakout over this 124 level. If we can get above that, targeting that 50 SMA on the daily chart, which right now is around 128.50. So keep that in mind in sort of in between this large range here as resistance. If we can clear it, next target would be 136.20, and then a big gap to fill on the chart, just like the Qs, all the way up to 141. So keep that in mind to the upside. If we do break down, though, still covered. We have support initially. You can tell that we are being propped up by this level here at 120 just about. If we break down below that, looking for support to come into play at 117.25, then our support trend line, which again, we're still trading well above. So that should act as a first touch bounce. If we do get back down into it, maybe a good pullback entry there. But then lower than that, you can see the low of this candle here sort of coincides with where we opened on this day. So we'll call that one in there. That is a level at 114.50. If we break down below that, we're looking at 110.73. Alrighty, so if you've made it to this point in the video, I'm sure you're enjoying the analysis, so be sure to hit the thumbs up button. I genuinely would appreciate it, and I think the YouTube algorithm would as well. Also remember, you can enter our free contest for the one-on-one giveaway that can be done on Instagram by following the instructions over there, or leave a like, comment, and subscribe on this video. Without further ado, let's get into Apple. So on Apple, I've gone ahead and drawn in our resistance trend line, this white dotted one you can see here, and we're hovering just below it. On Friday's action, we came almost up to it there. One thing I want to point out here is that earnings are coming up on the 30th after market close. We don't normally play options through earnings just because of the volatility and contraction on the contracts could potentially leave you a loss even if you get the price in the right direction. So that being said, if we start to get a breakout of this level before earnings, before Friday essentially, then we'll look to play the move to the upside here, but not holding the contract through earnings. I think that's important to note that you could get suckered out of some volatility there. So keep that in mind. To the upside, if we do get that breakout, first having to get above our 286.50 level, and then we're targeting, of course, this 303.73 high back in here. And I think, again, with the anticipation of earnings, it's very well possible that that move could happen. To the downside, though, if we start to see a breakdown, and again, not playing that move up unless we really start to see some action over this resistance trend line. But again, to the downside, we are covered with the supports. We have our 50 SMA coinciding with this level here at 273.41. Look for a first touch intraday bounce there as a super support forms. If that breaks, we have another level down here at 265.60 based on our lows in here, and one more below that. 200 SMA coinciding with 256.35. That should act as a super support as well. If we get all the way down into it, look for a first touch bounce there. So Netflix is essentially forming a very similar pattern to what we had here before this massive breakout. You can see that we're consolidating and going sideways within a range. It's not quite as tight, but you can see that we have essentially flat lows here. This dragonfly doji that formed on Friday would lead me to believe that buyers are still interested in picking up shares down here at 414.40. So to me, again, I think the move is to retest some of our highs up here, not quite all the way up to 450, but certainly testing some of this area up here. One thing I do want to note, again, just like this pattern that we had down here, if we do start to see a breakdown below this 414.40, just think of all the longs who will have to stop out and close their positions. I think that could cause a nice, sort of squeeze to the downside here, where sellers have to accelerate the selling just to get out of their positions, and then we could see a move all the way back down to this 393 level. So keep that in mind. If we see the breakdown of this, expect a nice flush to the downside. But again, based on the doji here, I think the move wants to be a retest of some of these highs in here, even if it's halfway through the range, where we see some of this resistance come in early at 437.90 just about. So Tesla coming back down into our range, we sort of had the look above and fail here, so we targeted the opposite end, and then we saw look above or look below and fail as well. We couldn't quite fill this gap to the downside, and now we're trading back within this range. We essentially have 3 days of sideways consolidation inside of this range, and again, we're still looking for the same exact thing to happen. We have a support that we can draw in based on the low of this candle. And right now it's just going to be, if we can break out to the upside, first target will be here at 773.32. Anything higher, and we're targeting our next resistance at 818. To the downside, though, same exact thing. If we break down, we're looking for a move to our low here. And then again, that will be a look below. And if we continue, we're looking for a move to close the gap all the way down here at 648.92. So BABA, we got that pullback off of our resistance area as we sort of talked about in last week's video, and we are forming what we could consider a bull flag where we're seeing a pullback, and right now we have pulled back into this nice little support area at 202. So to me, I would be looking for potential entries around here for another retest of this resistance trend line. If we start to see some confirmation here with some green candles early into next week, we do have to break above our 207.47 resistance, and then after that, again, we have a resistance downtrend. If we can break above it, though, 215, just about to play a whole dollar. Anything higher than that, and 224. To the downside, though, if we do start to break down and continue this pullback in the bull flag, we're looking at the 50 SMA to sort of act as support if we break down below our 202 support. Anything lower, we have this zone down here between 195 and 194 just about, so keep that in mind if we do start to see a further pullback. So Facebook looks really good. It's been showing a lot more relative strength as opposed to what it was doing in the past. Obviously, on Friday, there was some news regarding free conference calls in competition with Zoom, so that pushed prices up quite nicely. Just to our 200 SMA here on the daily chart. We have earnings coming up on the 29th, so keep that in mind if you are planning on holding any contracts this week in Facebook. But again, if we can break out over this green 200 SMA here, which is hovering right around 190, then the move is to our next resistance at 197. After that, we have 203.50 just about, and then there's a gap to be filled to the upside here to the low of this candle, which we can draw in. That's at 209. To the downside, if things start to turn around and we get rejected off of this 200 SMA, then we could see a move back down to support here, which our 50 SMA is coinciding with, and that's at 177.03. That will act as a super support, first touch bounce. If it breaks, our next level below is at 170.25. Nvidia is sort of hovering around right in the middle of some sideways consolidation. Again, you can see we're about halfway between the range of where we came up to as a high and then pulled back from. You can see, again, halfway here. We're looking for a move to continue up to 298.73. If that happens and we see a breakout, again, the target is the high up here at 316.32. Earnings a little bit further away on this one, so not as concerned with options contract volatility. To the downside, though, if we start to get rejected again with the wick of this candle, if things don't quite get any traction above it, then we're looking for a move back down into support at 272.35. After that, our 50 SMA, sort of coinciding with this 259.50 level, but slightly above it now, should act as a first touch super support on any sort of move back down into it. Lower than that, and we have 241.26. Microsoft is consolidating quite nicely below this price level here at 174.21. It's a beautiful little pressure cooker that's forming. Again, think of all the shorts who will have to close their positions out if it breaks above, in which case we can easily target our 177.21 resistance based on this gap fill, but I think it's a little bit higher than that now. We're going to adjust that level slightly higher to reflect the high in here, so I think that's more like it. So right around 179, that should act as resistance if we can break out over this 174 level. To the downside, though, if things start to collapse, we have essentially the opposite happening, where buyers will have to then close their positions if we break down below this low here at 170.91. If we break down below, I think a quick flush down here to 168.11 is very well possible. Lower than that, and we have our level at 165.50, and continuing lower 50 SMA coinciding with this 162.50 support should act as a super support for such bounce. But again, based on this consolidation trend being primarily up for the most part, I think the move is to the upside. Again, earnings on the 29th. I wouldn't really hold a contract through that for volatility contraction, but again, that's up to you. And last but not least, we have Amazon, which is doing the same thing as Netflix, just about consolidating sideways in a nice range up here, forming a bull flag. The more sideways consolidation we can get, the more anticipation and move in one direction or the other we will see happen. Again, earnings coming up here on the 30th. Keep that in mind. I wouldn't really hold, as I've been saying, through earnings, any options contracts. We sort of have a resistance trend line that looks something like that. it's following the price down quite nicely. If we can break out above it, then I think the target would be to come up here to retest the high and then go to our round number 2,500 as whole dollar psychological resistance. So keep that in mind. If we get a breach of this resistance, boom, nice breakout to the upside. If we get a move and continuation to the downside, look for this resistance trend line to keep acting as resistance as prices pull back off of it. Our first support below is at 23.14. Anything lower than that, we have sort of the low of this candle should act as a little bit of a support on the way down. We'll draw that one in there. That's at 22.78. If we go below that, looking for a move all the way back down to 21.83.33. Again, based on what's going on here, I think this sideways consolidation, nice little flag pattern. The move should be up, but again, keep in mind earnings could sort of do anything on this one as it could with the rest of our earnings plays. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know down below in the comments section or by simply leaving the video a thumbs up. If you're interested in entering the contest for that one-on-one call, again, you can do so on Instagram or by liking the video here, commenting, and subscribing. With that being said, I wish you a green trading week.